Chevron announced earnings for the second quarter of 2023. Right now, their stock is up 1%, while the rest of the market is up 2%. So they're basically moving right on par with the rest of the market. I'm going to look into some of the recent news that came out surrounding Chevron in this video. I'm going to look into their financial statements, and then I'm going to use a discounted cash flow model and a weighted average cost of capital to figure out Chevron's intrinsic value per share. So right here, this article is titled Chevron Closes PDC Deal on Shareholders Nod, Oil Touches 10-Month High. They basically touched on the fact right here that Chevron announced they officially purchased PDC Energy in a $6.3 billion deal, bolstering their U.S. oil and gas operations, which pushed their stock slightly higher. They pointed out that after shareholders of PDC Energy approved of the purchase, they purchased the company only 2 months after announcing that they were going to. With the deal complete, Chevron now has a stronger foothold in the resource-rich Denver-Julesburg Basin, bolstering their U.S. onshore holdings. The deal has an enterprise value of $7.6 billion, including PDC's $1.3 billion of debt. Right here, they point out that they did believe earlier that the deal would end up adding about $1 billion per year in free cash flow, which is pretty substantial, especially considering the fact that Chevron is mainly a dividend-paying stock. So this is more value that they get to return back to their shareholders. And then lastly, they point out right here that along with ExxonMobil, Chevron and other energy giants in the second quarter reported sales falling around 30%, and they also reported profits being cut in half compared to a year ago. In the second quarter, Chevron returned $7.2 billion to their shareholders, $2.8 billion in dividends, and $4.4 billion in common stock repurchases. So pretty good news for Chevron with their acquisition, and also with the increase in free cash flow coming up, along with them returning value back to shareholders. Right here, this is their income statement. We can see that for revenue, it's down year over year from $68.7 billion to $48.8 billion. That's a decrease of about 29% year over year. And then for net income, we can see that's down from $11.6 billion to only $6 billion. So that's a decrease of about 48% year over year. So like the other oil companies we've looked at, Occidental Petroleum and ExxonMobil, Chevron in the second quarter of 2023 did not have very good revenue and earnings growth. Then if we go to page 6 here, we can see their balance sheet. Total assets came out to $251 billion, down from $257 billion. And most of their business looks like it's financed by equity with $159 billion of equity. And of that, they have about $196 billion of retained earnings, up from $190 billion. Lastly, for their cash flow statement, comparing the first half of 2023 to 2022, they had operating cash flow of $13.5 billion, which is down from $21.8 billion. And then they had cash dividends of $5.6 billion and purchases of treasury shares of $7.9 billion. They're returning value back to shareholders. They've pretty much almost returned all of their operating cash flow back to shareholders, as we can see right here. So that's a pretty good sign for shareholders of Chevron who are trying to get a larger return on their investment. Right here, we can see this is the discounted cash flow model to figure out the intrinsic value per share for Chevron. I'm using a growth rate of 18% because over the last 5 years, from 2018 to 2022, they've grown 18% compounded annually, from $16 billion of free cash flow in 2018 to $38 billion of free cash flow in 2022. For weighted average cost of capital, I used this calculation right here. We can see that book value of equity came out to $160 billion. Book value of debt was about $97 billion. Interest rate on their debt in the most recent full year was 2%. Tax rate 28%. Their beta was 1.16, so they're slightly more volatile than the rest of the market. And so to calculate their cost of equity, I took the risk-free return, added that to their beta, multiplied that by the market return minus the risk-free return. That gave us their cost of equity at about 11%. They have 62% equity, 38% debt. And so to calculate the weighted average cost of all of their capital from their debt and equity, I multiplied their equity proportion by the cost of equity, added that to the debt proportion, multiplied by the cost of debt, and then I multiplied the debt proportion by the tax shield, which is 1 minus a tax rate of 28%. That gave us the weighted average cost of capital of 7%. Year one free cash flow, $38 billion, net debt position of $11 billion, and then shares outstanding of a little less than $2 billion. Putting their intrinsic value per share at $568 per share, which means they would definitely be trading below intrinsic value per share right now, since they're currently trading at $159 per share. But keep in mind, this is based on their growth rates from the last 5 years. So it's basically assuming that they're going to be able to grow at the same growth rate for the next 5 years that they were for the last 5 years. But the oil sector is very cyclical because prices increase and decrease and fluctuate pretty wildly. That could have a pretty big effect on the up and coming growth rate for the next few years for Chevron. So I encourage everyone to do your own due diligence for this analysis. Right here, comparing them to their competitors, it looks like Occidental Petroleum has the highest profit margins, but Chevron has the second highest dividend yield, right behind Exxon. So they're pretty competitive. They have similar profit margins compared to Exxon, similar dividend yield. But based on dividend yield alone, you'd want to give it to Exxon. They pay the highest. And based on profit margins alone, you'd want to give it to Occidental Petroleum. So not very good for Chevron here compared to Oxy and Exxon. Lastly, I wanted to compare Chevron to the other companies we've looked at in past videos. It looks like they come in fourth place for share price compared to intrinsic value. They come in at 28% of their intrinsic value per share. So that puts them in fourth place. Occidental Petroleum and Exxon are taking the number 1 and number 2 spot. AMD, Google, Albertsons, Alibaba, and Etsy are also the other companies we've looked at that are trading below intrinsic value per share. Then right here, we can see that for growth rate, they had an 18% projected or historical growth rate, not good enough to get them onto this table. AMD holds the number 1 spot at 83%. Gross profit margin for Chevron was only 21% with a 15% net profit margin, not good enough to get them onto either table. Right now, Occidental Petroleum holds the highest net profit at 36%, and Adobe holds the highest gross profit at 86%. For dividend yield, they have one of the highest at 3.16%. They are a dividend paying stock. Intel had the highest at 5.52% on that list. Revenue and earnings growth was pretty abysmal for Chevron. They were down year over year. For revenue growth, it was about negative 28%. And then for earnings growth, it was negative 48%. So not good enough to get them onto either table. Looks like Tesla was number 1 with 47% revenue growth for the second quarter, and Intel with 400% earnings growth for the second quarter. Lastly, for stock performance over the last 5 years, it looks like Chevron increased 29%, not good enough to get them onto this table. Tesla has the number 1 spot at 1,000% return over the last 5 years. So based on this, it looks like they're not very competitive for profitability, second quarter growth, or stock performance. But for dividend yield and share price compared to intrinsic value, they are very competitive. They're basically lacking behind Occidental Petroleum in profit margins and ExxonMobil in dividend yield. So not very good compared to their 2 competitors on this list. And then based on this discounted cash flow model with these historical growth rates, it looks like they are currently trading below intrinsic value per share. So let me know in the comment section down below what you guys think of Chevron. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.